China new bank loans tumble more than expected amid property jitters. Concerns about the Chinese economy. In recent years, the Chinese economy has been a source of concern for many. The country's vast size and population make it a major player in the global economy, and any slowdown in growth could have serious ripple effects. There are several factors that have led to worries about the health of the Chinese economy. One is the country's dependence on exports. When demand from abroad slows, as it has in recent years, Chinese factories are forced to cut production and lay off workers. This can lead to a sharp decrease in economic activity and an increase in unemployment. Another worry is China's large amount of debt. The government, businesses, and households have all been borrowing heavily in recent years to finance investments and spur economic growth. This has left the country with a very high level of debt that could become difficult to repay if economic conditions turn sour. What happened? New bank loans in China fell more than expected in August. New bank loans in China fell more than expected in August amid concerns about the country's property market. Analysts had expected new bank loans to total around 1 trillion yuan, $152 billion, in August, but actual lending came in at just 787.8 billion yuan, according to data from the central bank. The sharp drop in lending suggests that Chinese banks are becoming more cautious about lending money as the country's housing market slows down. Property prices have been falling in many major Chinese cities in recent months, and developers are having difficulty selling their units. The slowdown in the property market is starting to weigh on the broader economy, with growth slowing to a 6-year low of 7% in the second quarter. Why it matters: slowdown in lending could add to concerns about the economy. A slowdown in lending by Chinese banks could add to concerns about the economy, as it would indicate that businesses are not borrowing as much to invest and expand. This could lead to a decrease in economic growth. Additionally, a decrease in lending could also lead to an increase in bad debts for banks, as borrowers may default on their loans if they cannot repay them. This could further exacerbate the effects of the slowdown on the economy. How it could play out: policymakers could slow down credit growth to control inflation and asset prices. The Chinese government has previously taken steps to boost the economy, such as lowering interest rates and raising the amount of money banks must hold in reserve. What's next? Data on retail sales and industrial output. China's new bank loans tumbled in September more than expected, central bank data showed on Friday, as slowing growth in the world's second-largest economy and property market jitters weighed on demand for credit. The data added to pressure on policymakers to do more to shore up growth after a spate of weak readings on everything from exports to factory output and investment. Analysts expect Beijing will unleash more stimulus measures in coming months, though they are divided over how aggressive those steps might be. What's next for China's economy? More stimulus measures are expected in coming months, though analysts are divided over how aggressive those steps might be. Slowing growth and property market jitters continue to weigh on demand for credit, meaning that new bank loans are likely to stay low in the near term. This could put further pressure on policymakers to take action to boost the economy. Need for more stimulus measures? Thanks for watching our nonsense YouTube channel videos. Please do subscribe our channel for more video, and it will YouTube algorithm to reach more people. In the face of an ongoing slowdown in the Chinese economy, policymakers have been under pressure to take more aggressive stimulus measures. However, new bank loans in China fell more than expected in August, indicating that further stimulus measures may be needed. Total new bank loans in China amounted to 1.2 trillion yuan, $171 billion, in August, down from 1.6 trillion yuan in July and below expectations of 1.4 trillion yuan. The decline was driven by a sharp drop in lending to the property sector, which has been struggling amid cooling demand and tightening credit conditions. The weak loan data adds to evidence that the Chinese economy is losing momentum and raises concerns that further stimulus measures may be needed to prevent a sharper slowdown. However, with debt levels already elevated, policymakers will need to tread carefully when considering additional stimulus measures. Thank you for watching our videos, and do subscribe our channel for more videos.